The Pacific Brief. From Sydney, we unpack the forces driving change across Oceania and Asia. From Sydney, this is the Pacific Brief. I'm Alex Morgan, bringing you stories from across Oceania and Asia that reveal how economies adapt, industries evolve, and leadership defines recovery. Today, we're looking at one of the most remarkable corporate turnarounds in Asia's aviation history, the rebirth of Thai Airways International, a story of financial collapse, state reform, and disciplined management that turned a national crisis into a blueprint for economic renewal. For decades, Thai Airways symbolized Thai hospitality in the skies. A founding member of the Star Alliance, it connected Bangkok to 50 destinations worldwide. But behind the glossy image, deep structural issues had been building for years. By 2019, the airline's debt had climbed beyond 100 billion baht. Too many aircraft types, 8 in total, pushed maintenance costs sky high. Overstaffing added more pressure, 35,000 employees with complex labor rules that made downsizing nearly impossible. Inefficient procurement systems and allegations of corruption only deepened the malaise. Then came the global shutdown. The COVID-19 pandemic was the final blow. Passenger numbers collapsed, cash reserves vanished, and by May 2020, Thai Airways filed for bankruptcy protection with debts of over 400 billion baht, the largest corporate insolvency in Thailand's history. The road back began with one decisive move. The Thai government cut its shareholding from over 51% to just under 48%. That technical change stripped Thai Airways of its state-owned enterprise status, freeing management from bureaucratic constraints. For the first time in decades, the airline could make commercial decisions without political interference. In September 2020, the Central Bankruptcy Court approved a formal rehabilitation plan. Leading the effort was Piasvasti Amranand, a seasoned reformer who had led a previous turnaround attempt, alongside CEO Chai Im-siri and board chairman Lavaron Sangsnit. Together, they built a plan that was as radical as it was disciplined. Over 5 years, from 2020 to 2025, the company executed one of the most complex corporate restructurings in Southeast Asia. Total liabilities were slashed from 400 billion baht to 190 billion. More than 53 billion baht in debt was converted into equity through a sweeping debt-to-equity swap. Creditors included Bangkok Bank, Krung Thai Bank, and thousands of bondholders, all of whom agreed to exchange loans for ownership. The government's stake stabilized near 40%, balancing oversight with operational independence. Operational reforms were equally tough. Staff levels were cut by almost half, down to 22,800. The fleet shrank from 103 aircraft to just 67, focused on 4 core types instead of 8. Old, fuel-hungry jets were retired. Thai Smile, the low-cost subsidiary, was dissolved, and its Airbus A320 fleet absorbed into the parent company. Every decision was about simplicity, efficiency, and profitability. At the same time, Thai Airways invested heavily in modernization. It ordered 45 Boeing 787 Dreamliners and 32 Airbus A321neo jets, with deliveries beginning in 2027. These aircraft will expand the fleet to 143 planes by 2029, a balanced mix of wide-body and narrow-body jets optimized for Asia-Pacific routes. The carrier's network strategy also shifted. By 2025, Thai Airways was flying to 51 international and 10 domestic destinations across 30 countries. Flights to China doubled. Guangzhou and Beijing each saw 14 weekly services. Routes to Xiamen, Chongqing, and Changsha returned, while new destinations such as Wuhan and Shenzhen were added. Bangkok's Suvarnabhumi Airport remains the nerve center, and the goal is clear: reclaim Bangkok's role as Southeast Asia's leading aviation hub. Financially, the results have been striking. Since 2023, Thai Airways has been consistently profitable. By the first quarter of 2025, the airline recorded an operating profit of 13.7 billion baht, an EBIT margin of 26.5%, among the highest of any full-service carrier in Asia-Pacific. Cash reserves now stand at 152 billion baht, providing a strong liquidity buffer. From a net loss of 141 billion baht in 2020, Thai Airways is expected to post a net profit exceeding 21 billion this year. On August 4, 2025, Thai Airways made its long-awaited return to the stock exchange of Thailand. Within 48 hours, its share price surged more than 200%, one of the most dramatic market reactions in Thai financial history. Analysts from Bloomberg and Reuters called it a textbook case in corporate rehabilitation. Behind the numbers lies a cultural transformation. Thai Airways has shifted from a bureaucratic legacy carrier to a customer-focused, digitally enabled business. Processes from procurement to cargo logistics were digitized. Sales channels were modernized. And the new Royal Silk business class on Airbus A320 jets now offers upgraded seating, wireless entertainment, and a refreshed premium brand identity. Leadership has been a cornerstone of this success. Piyasvasti Amranand described the process as cleaning the house room by room. CEO Chai Amsiri focused on rebuilding investor trust, while Budget Secretary Lavaron Sangsnit ensured financial discipline and transparency. Together, they built an executive culture driven by data, not politics. Today, Thai Airways holds a 15 to 22% market share at Suvarnabhumi Airport, aiming for 35% by 2029. Across the wider Asia-Pacific region, it commands roughly 15% of the full-service market, competing head-on with Singapore Airlines, Cathay Pacific, Japan Airlines, and ANA. While AirAsia still dominates the low-cost segment with more than 45% in Thailand, Thai Airways has carved out a clear premium niche, offering higher service quality and global connectivity through its Star Alliance membership. Industry observers have taken note. The Thailand Development Research Institute calls the Thai recovery a blueprint for public sector reform. The Straits Times highlights it as proof that government-owned enterprises can thrive when given autonomy. Even CNBC recently described the airline's journey as a masterclass in disciplined recovery. And yet, challenges remain. Political interference continues to be a risk. Recent reports show tensions between the airline's management and the government over board appointments. But so far, leadership has held firm, insisting on independence as the foundation for long-term growth. Looking ahead, the company's 5-year investment plan, worth 170 billion baht, sets a course for aggressive expansion and modernization. The aim is not just to grow, but to lead the region in profitability, sustainability, and service innovation. The airline has already phased out first-class cabins to focus on an enhanced business product and more efficient configurations. From a broader Pacific perspective, Thai Airways' story holds a lesson far beyond aviation. It shows how governance, discipline, and market logic can rebuild national champions, even in turbulent times. Across the Indo-Pacific, from Jakarta to Wellington, many state-linked enterprises are facing similar crossroads. Thai Airways proves that reform is possible when autonomy meets accountability. From the edge of the Pacific, this isn't just a story about an airline. It's a story about economic resilience, strategic leadership, and the changing DNA of Asia's public sector. I'm Alex Morgan in Sydney, and this is the Pacific Brief, powered by infobrokerworld. Join me next time as we continue to explore how data, strategy, and innovation are reshaping the future of the Pacific economy. Until then, stay informed, stay connected, and remember, the Pacific isn't a periphery anymore. It's a driving force in the global market. From Sydney, this was the Pacific Brief, decoding the economic, technological, and geopolitical forces shaping Oceania and Asia. You'll find more details, sources, and related insights in the show notes. This episode was AI-generated, written, produced, and voiced with advanced generative technology. I'm Alex Morgan, information influencer for InfoBrokerWorld, reporting from the Pacific's front line of change. At InfoBrokerWorld, we specialize in transforming expert knowledge and research into fully produced AI-based podcasts, from data and editorial research to script writing, voice synthesis, and final production. If your organization wants to bring its expertise to life through intelligent audio storytelling, you'll find contact information and production details in the show notes. Thanks for tuning in. And until next time, this is the Pacific Brief, where Oceania meets the world economy.